All right, today we're going to peek behind the curtain of a tool a ton of crypto traders swear by, the Fear and Greed Index. I mean, it claims to measure the one thing that really drives the market more than anything, human emotion. So the big question is, how does it actually work? Seriously, think about it for a second. Your last crypto trade, what was really behind it? Was it all cold, hard logic? Or was there a bit of, gut feeling involved? It's a super important question because let's be real, in the world of crypto, emotion isn't just part of the game, it pretty much is the game. You know how it is. The crypto market is this massive roller coaster, right? When prices are shooting up, that fear of missing out, that FOMO, kicks in, and it kicks in hard. It pushes everyone towards greed. But then, the second those charts flip red, boom, panic can take over, and people start making some pretty irrational selling decisions. It's a cycle that can trap literally anyone. And that, right there, is the exact problem the Crypto Fear and Greed Index was created to solve. Its whole purpose is to try and measure these collective emotions, all the panic, all the hype, and then crunch it all down into one simple number you can actually use. Okay, so here's how it works. The index is on this simple 0 to 100 scale. If you see a score under 25, that means extreme fear is basically gripping the market. As that number climbs up past 50, which is neutral, we start getting into greed territory. And then anything over 75? Well, that's extreme greed. And it's a huge sign that the market might be getting a little too excited, a little too euphoric. And just to give you some real-world context, today's number is 48. I mean, that's almost perfectly neutral. But get this, just a month ago, the index was sitting at 73, which is firmly in that greed zone. It's a perfect example of just how fast the mood of the market can totally flip. So that leads to the next big question, right? How does this emotional speedometer actually get to that number? It's not just some random guess. Nope, it's a calculation that pulls from a bunch of different key data points, and each one tells a little piece of the emotional story. So the final score is actually a blend of a few different things, and each one has a different weight. The two biggest players here are volatility and market momentum/volume. They each make up a whopping 25% of the score. Then you've got social media and surveys, which are actually paused right now at 15% each. And finally, Bitcoin's dominance and Google Trends each chip in with 10%. So let's just quickly break down what each of these really means. First up, we've got volatility. What the index does is it compares Bitcoin's current price swings to its recent 30 and 90-day averages. And when you see a sudden, crazy spike in volatility, that's almost always a sign that the market is getting pretty fearful and uncertain. Next is market momentum and volume. This one's pretty straightforward. When the index sees unusually high buying volumes day after day, especially while prices are going up, that's a classic signal that investors are getting way too greedy, way too bullish. Then, of course, there's social media. The index is actually analyzing hashtags and interaction rates on places like Twitter. So if you see a sudden explosion of posts and engagement all about Bitcoin, it often points to rising public interest, which, you guessed it, usually means greedy market behavior. Bitcoin dominance is a really interesting one. It's just measuring Bitcoin's slice of the entire crypto market pie. When fear starts to creep in, you often see investors pull their money out of their riskier altcoins and run to Bitcoin as a sort of safe haven. So yeah, a rise in Bitcoin dominance often signals fear. And last but not least, Google Trends. The index keeps an eye on search volumes for specific crypto terms. So, for example, if there's a huge spike in people searching for something like Bitcoin price manipulation, well, that's a crystal clear sign that fear is spreading through the market. Okay, so we know how it's built, we know all the ingredients, but does this thing actually work in the real world? Does it reflect reality? Well, let's put it to the test. Let's look back at two huge market events and see what the index was saying. Just look at this, November 2021 versus November 2022. It's like night and day. Back in 2021, the index was screaming over 80. That's extreme greed, right as Bitcoin was hitting its all-time high near $69,000. And what happened right after that peak euphoria? A long, painful bear market began. Now, fast forward exactly 1 year, the FTX exchange collapses, sending shockwaves everywhere. The index plummets to 12, extreme fear. But here's the crazy part. That moment of maximum panic, it actually ended up being the calm before the storm, the start of the next bull run. These two examples point to two really powerful and kind of counterintuitive ideas. First, extreme fear. That moment when everyone is panicking and selling, it could actually be a signal for a buying opportunity. And on the flip side, extreme greed, when everyone is euphoric and thinks the price can only go up, that might just mean the market is overheated and is due for a big correction. But here's the most crucial point, and you really got to remember this. This index is not a crystal ball. It does not predict the future. Its real power is as a tool for self-awareness. Think of it like a mirror, showing you the market's current emotional state so you can stop yourself from getting swept up in the crowd's fear or its greed. There's a great saying for this. An informed investor uses this index as a warning signal, not a guarantee. That's it, right there. Think of it like a check engine light for market sentiment. It's not telling you the engine will blow up, but it's a darn good prompt to pause, pull over, and think logically when it feels like everyone else is acting purely on emotion. So there you have it, the Crypto Fear and Greed Index. It's just one simple number, but it tells such a complex story about market psychology. Now you know how to take the emotional temperature of the market. So the real question is, now that you know the score, how are you going to play the game?